Hey guys, hope you are all having a great day. So I was at the gym, running laps when I passed a group of people grouping together watching the news. I stopped to look at as well, and the headlines summed up the worst fears. Explosions near the capital of Ukraine were being reported, and Russia was said to have begun their invasion. I stayed up almost all night reading and watching the news, anticipating a steep market fall. I had some brave individuals ask me multiple times if this was a market crash, and I still remained skeptical that we would actually crash. I made a very detailed and long video on Sunday talking about the stock market, its little exposure to Russia and how it performs in times of war. I also recently talked about oil as well, and why I still remain skeptical in that this conflict would bring a market crash. Like I said, stocks fell sharply, but it was not a crash. The only stocks that crashed were the Russians, with the country's main index dipping 45% before recovering a bit. It was a monster fall, and one which will have long-lasting effects for months and perhaps years to come for them. Putin chose the dumbest path forward, and he will suffer very serious economic repercussions for it. US stocks fell sharply, but nowhere near as bad as people thinking a market crash was imminent would. Nasdaq fell more than 3%. The Dow Jones sank 800 points, and the S&P 500 declined 1.5%. Sounds ugly, right? Well, it wasn't the drop that dropped jaws and had everyone scratching their heads. It was what came after that has everyone puzzled, so let's talk about it. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. After falling off, Wall Street's benchmarks began a comeback from its low trading sessions in the early morning. So why exactly did we bounce back this way, to the point that all major indexes ended up green in gains? Well, the market overreacted by the sell-off as it always does. This is something we often talk about. The markets are incredibly sensitive to news and overreactive. After the sell-off, investors began buying back, quickly racing to try to catch the major discount that had all the best stocks cheap. This is because big money knows that our market will have little exposure to what is happening in Ukraine. Right now, our biggest hindrance is not in Europe, it's in the uncertainty of what the rate hikes that the Fed will introduce be. I talked about this at length on Sunday and Monday's video as well. Rate hikes are the fundamental worry that every investor has, because it's difficult to anticipate how the market will really react, if the Fed will get its number right, and how other investors will adapt to the changes. For years, interest rates have been near zero, leaving investors little risk and allowing them to invest more freely. Now, that era is about to end, and investors are scared of the implications it will have. Today's market drop, and subsequent market rally, are both products of strong uncertainty and fear which have ruled investors' minds for months. Still, this goes to show exactly what I have been preaching to you guys. Investors are bullish, from big money down to the grandma trying to make the most with what little she has. Everyone is incredibly bullish about the long-term perception of our economy this year. Once rate hikes get set in, and if they get them right, we are bound to start rallying up. Again, I cannot suggest you guys watch my previous videos on this, I talk about it in length. This war has little chance of causing a market crash. The only way that I see it doing that are if Russia decides to invade a NATO country, or if oil gets out of control to the point where it shoots up over $130 per barrel, which would cause severe consequences for inflation and therefore screw us up. Open up those SPY and Dow Jones charts, any major cap stock, and you will see why it is that I am so bullish on this economy. I did not buy the dip today, because I actually thought we would fall more than we did, and I think there is a possibility where we could dip lower in the coming days, so I held off on buying, but any price right now is an absolute win long term. March is going to be pivotal to us, as it's the anticipated month when the rate hikes are set to begin. Depending on what is announced and comes down the pipeline, it could be the month where we finally start inching and crawling our way out of this bear market. Again, I have been and remain super bullish now more than ever. That performance today left me fully confident that we will be fine long term. Is there a chance we could dip lower? Yes, there is a chance, but my bets are with the bulls now. Market's been bear enough and I don't see it lasting for more than a couple months at worst. Moving on to Europe again, President Joe Biden announced that he and the G7 counterparts will move forward on devastating packages of sanctions and other economic measures to retaliate against Russia's attack on Ukraine. He unveiled the first tranche of financial sanctions targeting Russia, and other European countries followed suit. Germany halted approval of the Nord Stream 2 natural gas pipeline that would have deepened Western Europe's dependence on the energy exportation of Russia. This will have massive consequences for Russia long term, as it will cost them tens of billions of dollars. Putin knew this was on the table, and that any actions against Ukraine were going to cost him this much, so it is unlikely that this would deter him from further aggressions. Something funny that I noticed was that around the near of the closing market, the Dow Jones average was cratering, as it was being held up by only 3 companies, and all of them were tech stocks. These companies were Microsoft, Intel and Salesforce, and it wasn't coincidence either. Investors are buying into the biggest tech stocks now that they are cheaper, because they know these giants are safe investments. What I think will happen tomorrow is that we could potentially see a sell-off. The rally behind the stock market makes sense, as many investors are jumping in out of fear of missing out a great investment opportunity with all prices down. But this was only one day. And since we are not receiving news daily about updates regarding interest hikes with the Fed, right now the market is simply reacting to news regarding Ukraine's situation. The market is on its heels ahead of the rate hikes, but there is also caution to be made about what this conflict in Ukraine could bring. I think that we are still very vulnerable to anything that could happen in Europe, whether it's more attacks or bad news coming from Russia, perhaps even the beginning of a new Cold War. Russia's resources to expand its imperial reach are heavily limited, and NATO surrounds its borders already. It's unclear what could happen long term, but any news of further escalation in the war could easily press heavy on investors, whose anxiety regarding inflation continues to rule their mind. What was really the most astounding moment in the day actually happened in St. Petersburg, Russia. Russian authorities told citizens to not participate in any anti-war protests, threatening to hold those that do accountable by prosecuting them. Their investigative committee warned them that they should remember that holding a criminal record holds a negative consequence and leaves a mark on the person's future. These threats came off as nothing but encouragement for the Russian people to take to the streets of the capital in the thousands to protest the invasion of Ukraine. It is clear that the people of Russia are not backing Vladimir Putin's decision to retaliate against Ukraine, and that they are just as angry as the rest of the world. It goes to show the wide gap between the sentiment of the public and the egotistical echo chamber between the elites and the higher-ups in their government. Let's now talk about today. The Fed submitted over $1.650 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 52% of the total volume today, while dark pool trades for GameStop accounted for 53% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bullish performance today, gaining over 12% for the day. The stock opened to a fall below yesterday's closing price. In the pre-market, AMC was trading underneath the VWAP, and at one point, it dipped to 13.80 as the lowest of the day. As it neared market opening, AMC began moving up, crossing the VWAP and shooting up above 16.40. After this, AMC began to consolidate for a couple of hours before moving up again, this time reaching as high as 17.77. It closed at 17.68, way above the VWAP. As for what will happen tomorrow, I will not give any probability on what I think. It is hard to anticipate what will happen since none of this movement is normal. Every stock had a similar bullish run after the morning dip. I personally think we will see it dipping in the coming days, which is when I plan to begin buying. Regardless, it was really astounding to see AMC run the way it did. Keep in mind that AMC will have its earnings report on March 1st, and we will be able to see how well it performed during the fourth quarter. Already, Adam Aron teased that the numbers will be very bullish, so as has become normalized, I expect a bit of a run only to be followed by more dipping as a cause of shorters manipulations. GameStop also had a bullish performance today, gaining over 8% for the day. It began dipping in the pre-market, and opened to reach a bottom of 104.12. After that drop, GME began moving up, and continued doing so the entirety of the trading session today. It closed at 124.58, way above the VWAP. I have the same sentiment for this that I do for AMC. I think this price action was way more reactionary and that we could potentially see more dipping in the coming days. Regardless, that is just my opinion based on observation, and I could be very wrong. All of us investors certainly enjoyed this run, and even more so the ones that woke up early today and bought that glorious dip. I remain incredibly bullish on GameStop and AMC long term, and these bearish market conditions should not last much longer than a couple months at worst. I said it days ago, I said earlier in the video, and I will say it again. I don't think what is happening will cause a market crash. I am bullish on the stock market overall because I see investors flocking to buy rather than sell. Today's rally proved to me that investors are aggressively buying and bullish long term, and based on market analysis I know for a fact that the main variable here limiting our upward progressing is the incoming rate hikes that will be implemented by the Fed. I think the Fed will get them right, and after some volatility as the markets adjust to them, which can last from weeks to months, we will then begin ascending back up. I think shorter term, there is a good likelihood that stocks will begin moving downward again. This little rally that we had today doesn't make me think that we are going to be moving straight upward from here on out until the rate hikes. The situation in Ukraine has just begun, and until we get actual news and updates in the rate hikes, we will be vulnerable to whatever happens in Europe. I am not worried about having missed the dip today, because I believe more will come. Please watch the videos I put out on Sunday and Monday where I talked about markets, market crashes, how markets performed during wars and conflicts, and why I am bullish now more than bearish as I have been since November last year. For the love of tendies, come join my Discord already, now more than ever we need to group together. Thank you for making it to the end of the video, that is all I have for you guys today. Let me know your thoughts down in the comments below, and most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.